Hello, everyone. My name is Matthew Frailey, founder of Breakpoint Trades. Founded it 22 years ago, way back in 2003, to provide the most advanced technical analysis on the planet, amazing trade ideas, awesome newsletters, and my personal passion, mechanical trading system. Again, it is Sunday, September 28th. Hope you all had a nice weekend. Anyway, this is going to be
Matt's
macro
macro
vision. It's
vision.
going to be a focus on Matt's macro vision swing plays. So, Matt's macro vision. So, again, as you would guess, it's about long-term swing ideas. It's something I've been very good at over the years, about seeing macro trends starting, telling you about it. And these are long-term investment trade ideas that you can hold for long term, that have potential to move for many months or even many years. Okay. So back to this slide here. Again, Matt's macro vision. Like I said, it's Sunday, September 28th. And again, as I discussed, one thing at Breakpoint Trades, and I've done it very well over the years, but I never had a dedicated section for, is once in a while I'll see, based on weekly and monthly charts, I'll see a setup, say a weekly or monthly coil, long-term basing pattern, something like that. And it's an instrument that I'm seeing a long-term macro trend starting on it. I done this with uranium back in 2020, gold and precious metals, and more recently gold and precious metals in February 2024, platinum and palladium back in April of this year, rare earth metals, world markets, emerging markets, you name it. Again, it's been a very popular and extremely profitable section on Breakpoint Trades, and many of you have profited from it. And so I'm really happy that I've actually made a dedicated section for this year. Okay. The problem in the past has been our newsletters can have anywhere from 50 to 70 charts, especially mine, because they tend to be very comprehensive. And, if I throw a long-term idea in there, it just gets lost in the shuffle. So that's why it's good to have a dedicated section for these. Okay. So in this week's update, we already did our general market weekend newsletter. So this newsletter today, September 28th, is focusing on these Matt's macro plays. And here's what I'm focusing on today: silver, gold, platinum, palladium, SPP. That's the ETF that gives you 50% silver and palladium. So it's a nice way to play both. SPSW, LIT, that's the Global Lithium ETF. REMX, that's the Rare Earth Metals ETF. Uranium, Ethereum, cryptocurrencies, world markets, and United Healthcare. So that's what I will be covering today. And before we get into a lot of the moves this year, especially, has been on these physical commodities and metals. Okay. And why is that? Well, we all know the fundamental reasons with the dollar, with inflation, and everything else. But before we get into all those charts, I wanted to show you this long-term chart of the 10-year Treasury yield. That's the TNX. Okay. So again, if you know your history, we had that inflationary market back in the 70s and into early 1980. And that was the inflations. That's when interest rates peaked, was essentially 1980 there. You remember the stories. Again, I was a kid at the time, but I remember hearing stories about mortgage rates, people buying houses with 13, 14, 15% interest rates, which is crazy. So that was the top of the interest rates, or the bottom of the long bond. Remember, bonds and interest rates move opposite to each other. So interest rates begin this long 45-year decline, and they bottomed in 2020, right around that COVID timeframe. So that's when the long-term interest rate market bottomed, or the bond market, the bull market, secular bull market, topped out. Okay. And we had a secular market top here in 1980. Then the secular market there bottomed in 2020. And essentially, we're in a new secular bull market for long-term interest rates, or a new secular bear market for the bond market. Again, remember the two move opposite to one another. So that's what this states here. Okay. And because of that, remember the 1970s? Again, that's when inflation ran rampant. Well, I think we're in the same type of period, and it's going to continue. Okay, so that's one reason we've been seeing this. Again, many other myriad of things. Not really time to go into that. Remember, my focus is technical analysis and the charts, but you get the idea. So let's move on, discuss these items. So first off, we're going to talk about silver. Okay, silver, by the way, this is a monthly chart. Silver is up about 16% for the month of September. Now, this is Matt's macro. I put it out there in February 2024, guys. Again, I've been covering silver since, early 2000s, but it based here, initially topped out in 2011 at $50. I'll get back to that. Came down, formed this long basing period. Then it formed this 3-year coil, and the apex of the coil was right here in early 2024. So that's when I issued it, and just an absolute beautiful coil pattern. If you bought this right around the $25 range, it's now in the 46s. So one hell of a swing play. And this image here is a zoomed out view going back to the 1970s. And again, I've discussed this chart quite a bit. This is just an amazing chart of silver. You essentially have, if you know your patterns, a 45-year ascending triangle, which is absolutely insane. A lot of us traders, we're trading ascending triangles that are anywhere from an intraday chart to maybe a few weeks on a daily chart. But this is a 45-year ascending triangle, guys. Isn't that absolutely crazy? So what do you see here? 1980 peaked out at $50. So if you know your history, the Hunt brothers cornered the silver market, and they got their butts absolutely handed to them there. Okay. Then took all the way into 2011, where you had the blow off top at 2011 once again. Come all the way down. Now we're coming back up. So the first logical target, like I said, is this $50 range. Now, do we go right here? Wouldn't be surprised. We're getting pretty close now. Maybe we tag it. Now, do we tag it? Then find resistance here once again? Perhaps. I don't think that's the ultimate high, though, guys. If we do pull back from the $50 range, I think we pull back, form a higher low, like I show here, and then ultimately we take this out. They always say there's no triple tops, and I think that's the case here. So if we pause here at $50, then pull back, it's going to be another buying opportunity, because ultimately this $50 is going to be taken out. Or we blow through it, pull back, find support at it, and then go up. Either way, long term, this chart measures up maybe $70 to $75 an ounce for silver, which is absolutely insane. And guys, here's another slide that I made, and I'm planning to make a dedicated video on this. But the surprising connection between this silver to the movie Trading Places. It's an excellent movie. And it was the jokes. It was the jokes. I was thinking there must have been a connection here, because when you look back at this chart, the Hunt brothers cornered the silver market in 1980, got their butts handed to them, almost went bankrupt essentially. Get back in there at once and sell! And then that movie Trading Places came out in 1983, just a few years later. So I was wondering, did the writers of Trading Places get the idea from the Hunt brothers? Because if you remember in the movie Trading Places, the Dukes try to corner the frozen orange juice market. And I looked at my history, and that's exactly what happened. So here's a couple cool clips for you.
We want you to buy as much
silver
as you can. The instant trading starts.
Don't worry if the price starts going up. Just keep buying.
And here's another image. This is an AI generated image. AI didn't get this exactly right. Problem with AI. The Hunt brothers, there was actually 3 of them. This shows 2 of them, but whatever. So again, you can see Hunt brothers there, and then Dan Aykroyd and Eddie Murphy for the excellent movie Trading Places, 1983. So the Hunt brothers, they cornered the silver market in the movie Trading Places. The Dukes tried to corner the concentrated frozen orange juice market. Pretty cool history there. Now, since we talked about that, let's move on to gold. So gold, again, just like silver back in February 2024, I was super bullish on it. Technically, what you had here is just an amazing basing pattern. And again, if you know your technical analysis, whenever you come out of a long-term base, that's when you have your big, powerful moves, and that's what it's done. Come out of that move, and it's been an awesome swing trade. If you bought this stuff around the $2,000 to $2,100, we're almost at $3,800 now. Okay. We recently had a coil pattern here, which broke to the upside. Probably one of the more well-spotted coil patterns, quite honestly. It was just absolute textbook. We do have a little MACD divergence here developing. We'll see if that ends up playing out. We appear to be in some sort of wave 5. You can see the 5-wave structure here. We are getting close to $3,800 though. And one thing, that 4,000 round number could be a magnet, because if just technical analysis, those big round numbers are important. The closer you get, the more likely you are to tag them. So a couple simple analogies would be a magnet. If you put two magnets very close together, they almost always snap together. Or a stock, there's the old adage on Wall Street, if a stock hits, 90, 96, $97, it almost always hits $100. And so the same thing may apply here for gold, just because it's getting close. So we'll just have to see. And here's gold on the daily. So again, probably one of the most well-spotted coils ever. Obviously played out massively. Just a beautiful ABCDE coil. You can see so far price has been pulling, the little pullbacks have found support right at that 9 EMA. So it's very strong. There are some divergences and stuff, but again, the further we get up, we may just go tag 4,000. Either way, to me, it is getting toppy. The question is, do we tag 4,000 first before any sort of meaningful top? And finally, here's the bigger picture chart of gold. Again, now from a long-term wave counts perspective, we're in this major wave 3. This is clearly a wave 3 pattern, guys. We now have a couple demand zones below, but eventually once this move tops out, maybe hit $4,000, whatever, I am then looking for a pretty good wave 4 correction. Then after that, I'm looking for another move to new all-time highs in a wave 5. Who knows how far this goes? Maybe gold eventually goes to 5,000 or higher. But eventually this wave 3 will end and we'll look for some sort of wave 4 consolidation. One thing I am keeping an eye on is this GLL ETF. That's the minus 2x inverse ETF for gold. You can see some really good MACD divergence developing here, kind of a little channel. So I don't own any of this yet. I'm just monitoring it. But eventually, once this metal does top out, this could be a way to trade a pullback in that area. And another thing to watch are the mining stocks. Now, short term, guys, the stocks lead. Long term, the metal leads. But short term, the stocks do lead. So I'm watching this GDX GLD ratio. So that's a ratio of gold stocks divided by the metal. You can see how it's been uptrending. So the mining stocks have been leading. You can draw a very well uptrend line here. So once this ratio starts to break, I think that'll be the sign. But so far, we have yet to see that. Another thing to watch is the US dollar. So just showing you the bigger picture monthly chart. The dollar is at this long-term support at the moment. So this could be an area for it to be defended. And it has been defended in this area, despite the fact that gold has continued to go up. But if the dollar really starts to find some good support here, has a decent bounce off of this area, maybe that'll coincide with gold finally hitting some sort of top, maybe here or around the 4,000 area. Now let's look at my next favorite item, which is platinum. So those of you who've been following, back in April 2000, well, this year, I issued platinum as a Matt's macro play. Now, at the time, I gave reasons from the chart, and I did a whole dissertation on the fundamentals, from the constrained supply and demand zone, all kinds of stuff. I did a dedicated video on this back in late April, early May. So check that video out if you haven't done so. But just from a technical perspective, what I liked about it is this nice coil on the monthly chart. It was really set up to break out, and I love coil patterns because they produce powerful moves. Again, you also had all these fundamental reasons. Like I said, there was something like an imbalance of over a million ounces from supply and demand. You had all these mines had shuttered because platinum had been declining for many years. A lot of it due to the EV market, and everyone thought that was going to take over everything. You weren't going to need catalytic converters, but whatever. Again, I went all into the fundamentals. But anyway, platinum, it's had a powerful move. If you bought it around this coil break in the 1,050-ish range, it's now almost $1,600. One hell of a move. It hit my first target, and it now may be on move to hit my second target. Otherwise, I consider this wave one of this new bull market. Everything was lined up with it, with the coil pattern, very tight moving average ribbon. Again, 60% move in this thing, guys, and just, since April. Unbelievable move. Now, that's the monthly. Here's the weekly chart. And this is the tradable ETF PPLT, which I issued back in April of this year. Again, beautiful coil here on the weekly. And look at this powerful move, guys. If you bought this around the coil break, again, you could have bought it early. I bought it early around this time frame inside the coil, and I added on the coil break. But even if you just waited for the coil break around 95, I mean, $145, guys. Unbelievable. Now, from a wave perspective, this looks like wave 1, 2, 3, 4, 5. So after a 5-wave move, I do get a bit cautious if it's a move to the upside. So for some sort of reversal, if this is wave 1 of this bull market, this soon may need a consolidation. But again, you've had 50% move here, or 55, 60% move just since end of April on a commodity. That is a hell of a percentage move in a short time. Congrats for Breakpoint Trades members and you YouTubers, anyone who followed this. Here is the daily chart. So you can see the breakout here on the daily from in May. Again, if you bought this range here, guys, you're looking at about a 60% gain here. Okay. And just recently, it's had a nice 3-month consolidation, 2.5, 3-month consolidation, formed another coil pattern, and broke out yet again. At the time, I wasn't certain if this was going to maybe have more of an ABC pullback. I would have preferred that, but instead it formed just a symmetrical triangle, broke out hard to the upside on expanding volume. So again, congratulations to everyone who played this. Next, Palladium. So Palladium has also been Matt's macro since April 25th. Now it hasn't had the monster move like Platinum. It's kind of just languaged around here, but guys, I think it's a delayed reaction, okay? So far this month it's up 11.1%, right? But it hasn't had the big monster move like, 60% move like Platinum has. But what you have here is a weekly long-term base that it's trying to merge out of. Notice your moving average ribbon converted from a bearish configuration to a bullish configuration that was pinching here, broke to the upside, and is now bullishly configured. So to me, this looks set up for longer term. It's eventually going to play some catch up to platinum. So I think it's going to have a delayed reaction. And that's why I've been scaling into palladium. Of course, PALL, that's an ETF you can buy. Similar look, obviously, same look. I also have Palladium bars and coins. It's physical, but I own this ETF here. Here's the daily chart of Palladium. So it's had a nice pullback here. So far, we got a higher low. It's trying to push again. But again, guys, Palladium has not had to move like platinum, and that's why I think at this point it's lower risk, and eventually it's going to have a similar move. So eventually we're going to have a monster move in this area. So make sure to follow Palladium. And if you want something to play both of them, I also issued this. I issued this back on April 1st, 2025 was the SPPP ETF. That's essentially it's ETF for 50% platinum and palladium. So you didn't really have to choose. You could have just bought this ETF. You can see the gorgeous base it has. And look at that percentage move here. Again, it's not as a big a percentage of move as platinum because it's 50% palladium, but it's had a heck of a move here. If you bought this sucker, say in the upper nines, it's now over 1350. It's came out of a beautiful base here. I like things coming out of a base. That's part of Matt's macro, because part of Matt's macro, guys, are these weekly, monthly charts that are having a major trend change direction. And these basing patterns are, a big part of that. So again, look at this, just gorgeous. You can see how the moving average ribbon had broke to the upside back there in May, and it is trending up nicely. Here's a daily chart of SPP. So again, you can see recently taking out those June highs on some expanding volume. And moving on, let's look SBSW. This is another one I put out in April. And it's an individual stock. They have it's almost like a rare earth mix. They have platinum, palladium, rhodium, iridium, and ruthenium. So again, guys, you bought this sucker in the 4 range, 5 range when I talked about it. You could see it was breaking this weekly trend line. It's had almost 150% move since. So congrats, much congrats to anyone who's been riding this puppy. One hell of a percentage move, much larger than platinum itself. It was a nice low price stock. Again, great trade. Now, there is a supply zone here from the January 2023, so maybe an area to finally take some profits. Okay. And moving on, here is the daily chart. Okay. Essentially, it did have a pullback after breaking out there in early May. Again, a lot of these things, that's when they moved from. Platinum, palladium was back in May, but peaked out there in June or July, essentially had a perfect 3-wave ABC pullback, and it has been off to the races since. Look on that ABC pullback, you had that moving average ribbon pinching. Next, in June, this was after my calls on platinum and palladium, was LIT. That's the Global Lithium ETF. So I issued this on June 1st, essentially. What I liked about it technically, again, we all know that lithium is an issue, guys, around the world. Not a lot of places have it. China's got a big monopoly on stuff. So we know it's an issue. But what I liked technically about this chart was you had this gorgeous weekly trend line, just a perfect downtrend line here. And earlier in the year, we were nearing this downtrend line. So to me, that looked a very low risk trade. So your buy trigger was buying this broken trend line, and it's been off to the races. Look at this puppy. So if you bought this, around the 37.50 range on that trend line break, it's now around 55 bucks. That said, this is the first target supply zone. So maybe it consolidates soon, but it's been a heck of a trade from that area. Here's the daily chart of LIT. This vertical line here represents essentially that weekly trend line break. And you can see it's just been essentially going vertical here. Eventually, guys, these things have had such big moves, we're going to have some sort of consolidation. But congrats if you've been riding this train. Next, REMX. REMX, that's put this out in mid-June. That's the Rare Earth Metals ETF. Again, rare earths, they've been all over the news, as you know. What I loved about this weekly chart, it's been downtrending since 2022. It had come into this weekly demand zone. You had a wedge pattern, and you had a double MACD divergence. And what I mean by that is you had a MACD divergence here and a second one. That's an extremely powerful pattern. You broke this again in June, mid-June. I put this out in mid-June. So if you bought this puppy in the 40s, you're looking at a 60% gain already. It is up here at a price of 65.85. Now, you could see how your moving average ribbon had flipped to a bullish configuration. Just, again, everything lined up. To me, what this looks like is a wave 1 up of a bull market. Eventually, it's going to have a wave 2 pullback. We've been kind of waiting on that, but this first move's been so powerful. And here's your next longer term target. But eventually we're going to have this wave 2 pullback. Hopefully sometime soon. That'll be a buying opportunity. And here's the daily chart of REMAX. So you can see since this trend line break back here in, if you bought this in June, you had your first major pullback there in July, and then your next pullback there in August into early September. And notice the perfect symmetry. So did not break symmetry, and we made a new high last week before pulling back on Friday. Here's uranium. Now, uranium is pulled back here from the recent highs, but this is an original Matt's macro play from December 2020, way back here. What I loved about it was this long-term monthly base. You had a 5-year basing pattern. It had a nice move up. Then it formed another coil here in 2023. I talked about it then. I talked about it early this year and hit my first target, and it actually hit my second target from back here in 2011. It's pulled back off of that area for now. Now, guys, because these commodities are so in vogue, here's another one. This is kind of boring, but the DBC ETF. Okay. Like I say here on September 26th, could be a Matt's macro play because what I like about this technically, notice you have almost a 3-year horizontal rectangle pattern. And what I state here, my comments, it's been consolidating. The longer something consolidates in a pattern, the stronger the trend move will be once it breaks out. So it's been consolidating here for quite a while. Eventually it's going to break this pattern, and my odds are that it's going to break to the upside. Okay. Again, this is going to have the DBC, it's not going to have the beta moves like some of those individual commodities I showed you above, platinum, palladium, REMX, and all that stuff. But it's still a logical play. What also makes sense with this, guys, is that early chart I discussed with the 10-year treasury yield, right? We are in a secular bull market in interest rates. They bottomed in 2020. Remember, they are declining from the 1980 peak, right? So essentially, we're in this bull market here in interest rates, or bear market in the long-term bonds. And so it's kind of like we're in this 1970s inflationary period. And guys, again, you might be saying, well, the Fed's cutting rates. Again, hopefully you know this. The Fed does not control the long bond. The Fed only controls the overnight rates. The Fed has no control over the 10-year, over the 30-year treasury yields. That is bond traders. They either follow the Fed or they don't. But longer term, bond traders are saying rates are going to go higher. That's longer term. Now, maybe they come down to this 3.5 range, but longer term, the trend is up. And that's going to support these commodities like you have here on DBC. Next, here's Ethereum. I've been talking about this kind of Matt's macro. So Ethereum, unlike Bitcoin, has more been stuck in this 4-year coil. And so I do have interest in Ethereum here because, again, unlike Bitcoin, it's just been in fuego. This longer Ethereum stays in this consolidation pattern, the stronger the trend move will be. So this is one I have interest in once it finally breaks out of this pattern. And here's the weekly view of Ethereum. You can see it broke out of a weekly coil here, and last week back tested that coil trend line. And the final one, guys, is just an individual stock, United Healthcare. I did a dedicated video on this. Here's the daily chart of United Healthcare. So again, I did a dedicated video on this, guys, back in mid-August. Talked about the fundamentals, talked about Warren Buffett buying it, talked about Jim Simmons and Renaissance Capital, whatever. Talked about the washed out oversold chart. But again, I issued this as Matt's macro back in August, and it's been playing out as well. The first target here is this gap fill. Longer term might be this upper target here. And here's the weekly chart of United Healthcare. So one of my long-term targets, say, would be this 420 area. That was previous long-term support. Now resistance, but that was still a pretty good move. Again, we put it on the website around $300, so it's already had a pretty big move, but I think it can make it up to that range. Again, it's kind of a different feel than the other ones I've discussed, like platinum and palladium and gold and silver. I'm not looking for the percentage moves on this one like that, but still it's going to be a decent trade. And here's the monthly chart. You could see United Healthcare got absolutely pummeled from that 617 high, essentially found support around the 61 fib. That's where we first put it out. So we'll see if it can make it up to this
Order
area
filled.
over time. In case you're wondering, that order filled was one of my automated systems, guys. You can see a 3-minute MES futures. It took another entry there. Sorry about that. So that was the order filled that you heard. And finally, moving on to some of these world markets. So back in early part of the year in January, I talked about how it appears that these world markets are eventually going to start to outperform the US markets. And that's been the case this year. And I just think we're seeing the early signs of it. So here's the EEM, the SPY ratio. You can see how it's been declining since 2010. Again, trends only last so long, but you can see this rounding actions, trying to base here, MACD divergence, moving average ribbons trying to curl up. And another one is ACWI. That, by the way, it's a mix of emerging markets and large cap developed world markets. So you can see same thing. Now this one's been declining since 2008 relative to the SPY. So the US markets have been the place to be all those years, but you can see how it's trying to round out. Really looks like it wants to curl up. One trigger I'm watching is the move up over this 50% area. It hasn't happened yet, but so far this year they have outperformed. And lastly, guys, on Breakpoint trades, if you do not have a subscription or if you're on Breakpoint trades and you do not have it, we have our amazing systems. So we have our KISS systems, and I have a lot of these Matt's macro plays right in the KISS system. So you hit systems, go to KISS STS tables, and you're brought to this area. So we have our daily systems here, which we have almost 800 stocks and ETFs here. But if you look here, there's a table for Matt's macro vision. And if you look here, you can see a list of these: Platinum, ACWI, that's that world market, GLD, SLV, United Healthcare. You can see the percent gains here. These are real trades. And you can set favorites. The beauty of the KISS systems, they're an automated system. They will send you an email or they'll text you when they go long. They'll tell you where to put a stop. They will tell you when to exit. So if you want a complete automated, systematic way to trade these MATS macros instead of just buying them and holding them, subscribe to our KISS systems. I also have some of these in our high performance area, which is intraday systems, and they attempt to get more performance, and they'll actually text you during the day. So again, if you're not a subscriber to Breakpoint Trades, definitely consider trying us out. Or if you don't have the KISS systems, try those out too. Anyway, guys, I've spent enough of your time. Again, appreciate all the support that you've given me over the years. Appreciate all you YouTube subscribers, and let's all profit together. Have a wonderful rest of your Sunday evening, and let's see what happens this week. By the way, on the general market, I am looking for some sort of high here, say in very soon, maybe in early October, looking for a pretty good pullback in the market. So FYI on that. All right. Again, enjoy the rest of your day.